But this is Corporate Radar, so let's invite our next corporate on the show. We have Mastek. They announced their fourth quarter's numbers, which beat estimates, although margins were a little bit under pressure. But what's the way ahead? Mr. Desai, the Vice Chairman and the Managing Director at Mastek, joins us on the show. Hi, Mr. Desai. Good morning. Good to see you in, as always. Thanks a lot for joining in. Well, let's talk about business, how things are shaping up. NHS revenue first. What was the contribution in FY25? And what's it going to look like in FY26?
See, revenue growth, as you know, for FY25 has been around 14% year on year. That means annual revenue growth, Nigeria. So the whole thing was, this is much better than industry, as you know. Industry did grow much lesser than that.
Mr. Desai, I was asking, what is the NHS contribution in the past year?
We don't have a contribution like that, each customer-wise. But healthcare together account for a fairly large percentage, close to 20%. And that includes, of course, NHS and other US healthcare providers that we work with. And that's a focus area that we have. It is next to our government and education sector.
Got it. All right. Just to get some more color on NHS, it's been around 3 months since NHS was abolished. Any spending cuts that you have observed?
No. In fact, in NHS, we have been very happy that some of our old projects, Nigel, which were actually under some kind of suspense due to a lot of changes that were happening over the last 2 years, which did affect us, as you know, have now started moving ahead. And we are booking orders as we speak. So we have not seen much impact, if you look at it that way, from these changes in NHS, because there's an existing commitment that NHS has made in terms of our backlog, in terms of the work that we do, and more work that they want to do.
Okay. All right. Got that. Give us a broad idea, sir, qualitatively at least, how quarter one has been so far. Now, in quarter four, there was plenty of uncertainty, right? Yet you grew by 2.9% quarter on quarter, which the street liked quite a bit. Many other of your peers, they reported a decline. So as things stand in quarter one, how are things panning out?
I would not like to speak specifically on quarter now that we are almost very, very close to the quarter. So I would focus generally saying what has been our focus area, Nigel. We are focusing on, of course, in our UK market, government, SGS as we call it, which is growing very fast. We have booked a lot of new orders. In fact, some of the orders were just booked post our results announcement, which we announced very early, as you know. And as you asked me about NHS and healthcare, these two sectors are doing it well for us across the countries that we are speaking about. We always like to target, and we have done that over the last 4 or 5 years, as you know. I have grown faster than the industry in terms of our revenue growth. And we would like to move in that direction during this year too. And I think we are well focused to reach that given our strategy.
Okay, let's focus. Mr. Desai, we won't push you. We don't want a quarterly number. Let's talk about the year. Last year you grew in double digits. This year, is it possible?
As I said, we would like to do faster than the industry. So I would like to definitely say that we would do better. You see, there is an uncertainty, you must realize, in terms of US-related issues. We all know that well. And how it pans out in second quarter, we have to see in terms of its impact on the market. So I would, at this point of time, not make any specific statements other than saying that we have a momentum. We are doing better than industry. We did it last year as I told you, even compared to the overall mid-cap domain.
Yeah.
Yes. We would hope to do that this year too.
But what will drive growth? Because I think UK is around 60% of your revenues. US, as you said, things are uncertain. But at some point of time, post this uncertainty, US as well could pick up, right? So how do you see geography-wise things pan out?
See, we have invested substantially in the tomorrow's technology. That's point one, which is about AI and data internally in terms of improving productivity and externally in terms of acquiring a company that we acquired, which focused on data particularly.
Mm.
Now, there is no kind of slowing down in that part of the business anywhere in the world, UK as well as US. In fact, we have booked fairly large orders in data related issues all over this quarter as we speak. So that is one driving engine that we feel good about in terms of growing. That's one. Number two, we have invested substantially last quarter. Some of it was got reflected in terms of our profitability, as you told Nigel. Is going to give us benefits in terms of growing in the existing market. Please remember, we have close to 100 plus active customers in US, for example.
Yeah.
And these customers are there with us for last 4 or 5 years, some of them. Some of them, of course, we have added last year. But each of these 120 customers are an expansion for us, particularly those who are in Fortune 500 and Fortune 1000 area. And given our focus, particularly in healthcare and data and AI, that we are training people, we have trained almost 70-80% on AI. We are focused with some projects in AI. I will not take all the names here. I feel confident that we are at the cutting edge in terms of the revenue side of it. And yes, we have to watch uncertainty. That of course we have to be cautious about. We can't just be, you know, ignorant about it. We have to plan, and we are constantly working inside to see how, if at all, we have to refocus or re-strategize and improve our control on the operations in the light of things that are unfolding. And I feel confident, given our new management, we have a CEO, as you know, and our board, we will be confident, Nigel.
All right, sir. Sir, it's good to hear, because that data, AI, that's the buzzword, right? And that's the entire focus out there. And as you said, no slowdown out there. In fact, that's the path ahead. As a percentage of your revenue mix, how much comes in from these segments?
See, presently it is below 10% as a data. And we feel that that is, again, a kind of indicator for us in terms of much more that we can do. And that, as I said, is a growth engine, and we feel confident that we can do that.
Okay, and as both these two verticals scale up as well, I understand that they are margin dilutive, at least in the near term. But still, you're confident that margins will improve this year to the 17 to 19%?
We don't want to make exact statement. That is a direction that we are moving. We want to move back to that number that we had, and last year has not been high in terms of that number. But we have spent that time in investing, and this year also, obviously, we would like to invest in future. But we would definitely like to improve what we have done over last year. That we are very confident as an overall year, because there has been a focus on improving profitability in house. We have task forces, we have top management working on specific areas. So I'm very confident that we will do better in terms of profitability than last year's number and move towards the number that you are talking.
But Mr. Desai, we can't let you go at that. At least margin band 17 to 19% is an aspiration?
Yes, of course it is an aspiration.
Got it.
Of course
all right. And
we would like to achieve as close to as possible. But as I said, we are moving in that direction, and we would like to do better than what we promised.
All right, 17 to 19%. When you join us at the end of quarter one numbers, maybe we'll push you a little bit more. Lower end of the...
I said not 19%.
not right now, sir. Not right now.
19%. I said we are moving in that direction. and we would like to see whether we can reach that band as soon as possible for the whole year. I don't want to make any prediction on this quarter, right?
Okay.
I'm talking of the whole year.
Okay, all right. And cash of 600 crores in your kitty, it helps at these kind of times.
Sure.
What do you plan on doing with it?
See, as of now, we would like to digest the acquisitions that we have done, Nigel. As you know, we have done 4 big acquisitions over the last 5-6 years. And we are just taking a halt right now and looking at what we can do moving forward. We of course have to look at our cash flow and see how we can utilize it the best. But as I always said, we are open, but at the same time, we are not accelerating. We are focusing on our existing operations and how we can move it ahead. If anything comes up, obviously, like any other thing, we are all open. But that's not we are moving in that direction that at a high speed.
All right, Mr. Desai, we appreciate you joining in. Thanks a lot for giving us some color. And at the end of quarter one, maybe we'll press you a little bit more for numbers. But as you said, situation's a little bit uncertain out there. You're optimistic on outbeating the industry with regard to growth. Your aspiration is to improve margins, and you're sitting on some cash as well in your books. Thanks a lot, sir, for joining in.
Absolutely, and interesting conversation there.